Hello, ladies and gentlemen. It's a modern financing show on both TV. My name is Sasha Starr, and today's guests are Dr. Milan Somberg. Welcome to the show.
Thank you for inviting me. Delighted
It
to be
was
here.
great to have you. And Jim Ead from Ead Foundation. Welcome to the show, Jim.
Thanks for having me, Sasha. I'm sorry I'm a little rattled. You and I have dropped pieces in chess. I just
Yeah.
dropped the chess set.
Oh, really? Oh, my God. Okay. Hopefully, it will not break.
Yeah, I think I can get it back together.
Okay, excellent. So today market is again similar to last week. The Dow is down. The overall market is up, and certain stocks. Uh, I don't know if I should name them or not because I don't want to sound like a broken record, but I have no choice as to suggest certain stocks. Okay, I will not mention names. They're doing extremely well as usual. And so, therefore, if you ask me if the market is up or down, I will say you have to divide overall market and stocks like Nvidia. And there is maybe a handful of stocks. I can't count more than five stocks. What are maybe seven? That's the best I can do. Who are on the same level? Actually, not on the same level, but close to that level, or something like this. So, what you do in a market like that, Jim? What's your opinion? What one should do in this market?
Well, in this market, I would stick to your discipline, whatever your discipline is, because I think the market right now is reacting to the interest rates. That's the primary driver. That sometimes in the quarterly reports, the earnings reports, the market is reacting to those as well. But right now, we think that the next move of the Fed will be neutral, not raising interest rates, which they've been doing consistently. I've had a big problem with that. I think it's the wrong thing because the inflation has been caused by the breakdown of the global distribution system. And I think what is required is smart people having new companies building around the broken distribution system and being able to deliver products to the consumers at a less expensive cost. And if we could enable them with low interest rates, they would be able to thrive and restore the economy even faster. But I think the economy is doing remarkably well coming out of the pandemic that was caused by COVID. And it was a global economic breakdown. And, not everyone is coming back as gracefully as the U.S. market is. So I would stick to whatever my discipline is and fear not.
Milan, what's your opinion on the market and what
Well,
we do today?
on the market generally, yesterday's Wall Street Journal had an article which talked about how J.P. Morgan Chase was fined $290 million for its relationship with Jeffrey Epstein. And if you take a look at Wall Street banks, Bank of America, Goldman Sachs, Wells Fargo, take a look at any of them. All of them are paying huge fines. This $290 million fine is not a big one compared to the others that have been paid. So I mention to our viewers all the time that we need Wall Street, but Wall Street is not our friend. And so we have to use them to execute our orders, but we have to just be very wary of the fact that they're paying such large fines. They budget for those fines the way you and I might budget for groceries or our municipal taxes, that kind of stuff. The Wall Street banks budget for fines that they're prepared to pay in the millions, and yet they're very profitable. If you take a look at the chart of almost any of the Wall Street banks and compare it to the S&P 500, they're doing very well in spite of those fines. Where's that money coming from? Is it coming from you and me? Yeah. So they're not our friends. So that's one issue that I have with Wall Street and Bay Street in Canada. And I want to draw that to the attention of our viewers. They need to be aware of that. Now, how we behave in the markets, what you're saying, Jim, is absolutely right. Stick to your method and don't change. But one of the things that's interesting is the forecasts we tell our members, Monday Morning Millionaire, we have about 300 members, we tell them to look at forecasts for amusement only. But the put-call ratio is a pretty reliable forecast. That is, if you have a large number of calls that people are buying relative to the number of puts that they're buying, that's a very bullish signal that market sentiment is a bullish one. And right now, it happens to be very bullish. And so, how does that affect our investing? Well, we talk about writing covered calls on the market in its entirety by using the S&P 500 as our underlying security. And writing covered calls, and we're going to be on a Monday, expiry date on a Friday. Why a week? Because you get a greater premium income the shorter the closer the expiry date is to the time that you place your order. So a week on a Monday, expiry date on a Friday, and so if you write just out of the money covered call, there's guaranteed income, and then half the time that will be called away from you, you're going to be in cash. In which case you buy you sell cash covered puts just in the money, and that's a reliable way of generating income. And if your underlying security represents the American market as a whole, it's a very secure way to go through life as an investor. Now, if the put call ratio is a positive one, and I would invite our viewers to check into the call ratio. If it's very positive as it now is, then writing covered calls at the money is not as productive as selling at $2, $3, $4, $5 out of the money, counting on growth to take place. And if the market sentiment is a strongly positive one, like it now is, then you get more by writing covered call, selling covered calls, $2, $3, $5 out of at the market level. So
what is it now, the put call ratio? What is it now?
it's enormous. It's very easy to find. You can just go to take a look at the options chain. Take a look at the options chain, and there is a line which shows at the market. And then you can take a look at how many calls have been sold.
You mean open interest?
Open interest, yeah. Compare that to the puts, open interest, and right now it's enormously positive. Yeah.
Oh, okay. So if that's the case, for example, let's take that stock NVIDIA that you already know so well, or at least I do. There is supposed to be enormous number of calls with open interest versus puts, right?
Uh-huh.
Okay. So does that suggest that you should buy calls, sell calls, buy puts, sell puts? What's your strategy based on this observation?
Our strategy is never to buy puts, never to buy calls, only sell. Buyers of puts and calls lose 100% of their investment frequently. So why do they do it? Well, they do it for the fact that they get enormous leverage. For example, SPY right now is trading, I don't know, about $47, $470 a share. So you need over close to $50,000 to buy one board lot of SPY. Yep. You can have the similar benefit of growth, should growth happen, for a couple of $100 by buying So that's why they buy it. But we recommend against buying covered calls, cash secure puts all the time, because selling them is guaranteed income. And the only risk in derivatives, it comes from the underlying security. And if your underlying security is the American market as a whole, as represented by the S&P 500, which SPY represents very accurately, then you are betting on the American market. And yeah, I keep mentioning that empires have a 100% failure rate, but the failure of the American empire is nowhere near in sight yet. So don't buy individual stocks. Don't buy, just sell cash covered puts and covered calls, and you can have a very handsome income on not a lot of money. $700,000 portfolio will keep you very comfortably funded if you use this approach. Now,
Mhm. I've last Friday, I've liquidated almost all my positions, and I've got on fund portfolio. I've got almost 80% cash.
mm,
And I started to devise by Monday the trading strategy and what should I do. And I decided to try S&P and what you suggested. And I couldn't press the button because I was asking myself, if you have stock like Nvidia, what makes you buy S&P 500, which in fact, since the beginning of this year, except 7 stocks. One of them is Nvidia, but there are some other funk stocks and Netflix and so on. They went up on average 50%, and S&P, all the rest, 493 stocks, they haven't gone anywhere. They are the same as the beginning of the year. So I know the 7 stocks. I know the best of them, Nvidia, and yet I would ignore them and buy the other 493 stocks. So I will dilute all my winners with all the losers, which are most of the S&P 500 stocks. And I couldn't make myself to pull the trigger.
you're talking here when you talk about the SPY S&P 500. Long term, you're buying the American market as a whole. And within that market, there will be losers, unquestionably, and there will be winners. But the American market as a whole is a winner. So that if you compare, take a look at the S&P 500 versus active investing. When you buy NVIDIA or anything like that, you're active investing. When you compare how active investors have done compared to the S&P 500 over a period of 15 years, 95% of them cannot match the S&P 500.
Well, let me tell you that for the last 6 months, my profit
That's
is
short term. You're talking short term here. Go ahead.
over 160%.
Tell us how you do that. We all want to know how you do that.
I have no problem. For example, what I've done today, I sold NVIDIA July 28, 410 put. The premium I've generated is $22.50 for each put. You understand what I'm talking about? It's incredible money. But another position is even more substantial than that. I sold NVIDIA January 19, 24, 420 put, and stock is already almost 120. It's 418, I believe. I got premium $60.40.
Nice work if you can get it. But
Yeah.
we should mention that we're not professionals and we're not recommending that you buy any individual stock.
Absolutely. No. Never do it.
Always consult a professional when you want to trade. You're explaining your experience, and you and I were both touting this stock when it was much, much lower than it was.
Yes.
So what we're talking about now is two different philosophies. Milan's showing you how to make a profit without a lot of effort or monitoring, and with a low stress level and a very high percentage over time.
But I have that as well, Jim. I have my core portfolio, which I don't touch. I don't do any transactions, except the only transactions what I do once, let's say every 6 months or so, there is enough dividends. So for me to get them out of this core account, that's all what I'm doing. And normally it's one every 6 months. So I'm talking about fund portfolio, which is completely different. So if I would accept that I don't do S&P in my core portfolio, instead of have high yielding dividend stocks. It's debatable whether what I'm doing is better. At least I feel that for some reason it's better because the stocks are quite safe and they're paying dividends. So I get out dividend income. I'm not a big fan of Berkshire Hathaway, where you cannot touch your money until you're dead. So I prefer to have my money while I'm alive. And so for this high paying dividend stocks, sort of serve me quite well. But I'm talking about now only fund portfolio,
Yes.
which I have
And
it in
what I was
different
going to say,
accounts.
Sasha, was that you're talking. I also mentioned Taiwan Semiconductor because
Yes.
what you're looking at there is a sector in the economy that is just going to explode, and it has exploded, and it was predictable, because all of a sudden, based on the geopolitical thing in the world, we became concerned that semiconductors were all offshore. We had no manufacturing capacity in the United States. So now it's become a priority. And NVIDIA has a couple of different applications. It's built into its whole system. It's more integrated. So it's not just the semiconductor
It
stuff.
has artificial intelligence, which is second to none. Nobody can touch it.
And that seems to be true, Sasha. So knowing that, and knowing that was coming, that was going to be the new thing, the new toy that everybody was going to think is the next shiny object that I must have. You especially, but also myself, were very far ahead of the game. I bought this stock when it was selling for $180 a share, and it's now almost 420. And the reason I bought it was all these things that we were thinking about. So I think there is both. It's a good policy that Milan is talking about, but there's also this way of playing the market where if you can see what's going on in the world and use your discretion and judgment and experience, which we both have, then you can buy these products, these stocks that when they're on them cheap.
See, Jim, but again, you are missing a point. We are talking about two different portfolios. You're
No,
talking
no,
about
this is a fund
portfolio,
portfolio.
and
No,
we're talking
I
about fund portfolio. So
right.
in fund portfolio, when you have stocks like Nvidia and you're limiting yourself to buying S&P 500 or some other products or stocks, investments, I think it's inferior, grossly inferior strategy for fund portfolio. I would like to stress that.
I agree. I understand what you're saying and the distinction that you're drawing. But Milan is talking about a core portfolio, and
Yeah,
not your discretionary funds, not the kinds of things you need to pay rent or buy groceries or that kind of thing. No. This is money that's purely investment for the long term.
absolutely. Well, as Milan said many times, you don't touch money that you need for groceries or your expenses for the next 2-3 years. So that goes without saying. Nobody.
But you don't do that in your fund portfolio. You don't invest in the S&P because it's not fun.
Yeah, it's
Among
not.
other
That's
things.
right. Yeah, investing should be like watching grass grow and paint dry. That's been said by a lot of academics who understand the system very well. Now, can you have a category, which is a very hot category, within which there are badly managed companies?
Yes.
Yeah, you can.
Must
So, badly managed companies sometimes are very difficult to spot because financial statements, which we look at, every line can be modified and engineered legally, except the top line. The top line, if you're going to engineer that, you're lying. So, except for the top line, they can engineer and modify every other line on financial statements, which I find difficult to read after reading financial statements for over 50 years. So, that this fund portfolio approach, the investors in the fund portfolio approach are losing 40% of the time, are 40% behind the market. I don't want to be there because there's rules-based investing and judgment-based investing, and rules always work. Number one is save. If you don't save, nothing else matters. And I don't need to go through the other five, which are do it yourself, buy the American economy as a whole, buy and hold, don't trade, adjust to your asset allocation when it's thrown up by market movement, and avoid complexity. Those rules work all the time. Now, when you have judgment-based decisions, much of the time they don't work. You're buying something from somebody who is selling it.
Yes, never do that. I agree completely.
So
Because
if,
many people are trying to sell you something.
uh,
And
Jim, but this way, I'm sorry to interrupt. This way, no one will never buy any stock because he will buy it from someone who sells the stock, right? So how you will build your portfolio? How you will make any transactions at all?
well, you buy it from the market. That's the way I look at it. Not someone who's on the TV
Okay.
telling me it's a hot stock. This is why, and giving me all the reasons why, because he's already owned this. He already owns it, and he's going to make money if I buy it too. No, these are the people I say. And especially sometimes brokers do this. You got a stock market broker, and you think that they are on your side, and they might sound like your friend, but they're also selling. They have to sell.
They will laugh at your jokes. They will laugh at your jokes. They'll make you feel like you're a genius. But that's right. They're in the business of selling and not on the business of money management. Yeah.
But the market doesn't care. If I buy or sell, the market doesn't care. And that's the way I look at it, Sasha.
It seems to me that I'm in a different universe. You. Because I don't listen to anybody. I don't read financial reports. I don't read any opinions of all these market makers, brokers, the cheerleaders, the influencers.
I used to, though, Sasha. That's why I'm warning people against it. I don't anymore, but I used to when I was initially.
I'm receiving a lot of financial publications and so on, and it takes me 3-4 minutes to delete all of the stuff without even reading it. I never read it. I never even open it.
Yeah.
I just boom, 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 out, boom, 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 out. And I'm receiving it in my major email service and in so-called spam and the social page. I'm on Google email, and so I'm deleting that all. Never even read one. Sometimes, if they have kind of a very, very interesting title, I could open it. Just for curiosity reasons, I open it, and what I do, and normally they have some kind of lectures that you have to listen for.
Yeah. And then delete
so
it.
what I do, I go into text. I go right to the end of it, and I'm wondering whether they will ask for $37 a year, or they will ask $29 or
wonderful advice.
So this is I'm going right to the end of it, and I see. Okay, $29. Nice try. Okay, out.
Well, Sasha, then we could talk a little bit about what drives you to buy certain stocks, and do you go through sectors? Oh, Mark, go ahead.
Yeah, I had a quick question because I had actually asked it earlier, but how much in the stock market should people be looking at what I call their interest groups and all in that section? Because you have some people that might be looking at stocks like 70% of the population is pet owners of the world. So some people that are in the stock market might be trying to say, hey, I'm a pet owner. I think I want to invest in Purina. And that's just one company that I know that is in that lane and everything. So as a person in investment, how much should you be thinking about things that you are passionate about in order to invest in, or does that not need to be a concern whatsoever?
Mark, I'll tell you, if you know who is Jim Cramer, he's analyst and influencer, I would call him that as well, on CNBC. He's there every morning from 9 to 10. Do you know the name of his dog?
I do not know the name of his dog.
NVIDIA.
Oh, well, ironically, like I said in the early thing, I was watching it. I don't oftentimes watch. I used to watch it more regularly, but I was watching Shark Tank, and literally one of the companies that was trying to get some money, they generally told them that they had a stupid name. And after I heard about the name, I was like, yeah, this is not going to get any investment. I don't even know how the company is surviving. I'm actually inviting them to come on Pod TV, and maybe they'll show up and everything. But they have the name Wolf, and it seems to me that would be hard to trademark, hard to market, and hard to do anything else because it is a dog company and it's called Wolf. So that was the first thing that the sharks were telling them, was that you've already got an issue because it's going to be hard for you to, one, you're in a crowded lane, and two, you're going to have a hard time distinguishing yourself because the name of your company is Wolf, WOOF, like the sound of a bark. and all in that space. But they made a legitimate point in my mind because I'm like, yeah, that's going to be hard to market.
What
Yeah.
can I say? All this and 75 cents will buy you a cup of coffee. That's all.
Yeah, yeah, yeah. You know that when it comes to opinions, we can have discussions, endless discussions, and many of these discussions are quite interesting. But when it comes to facts, there can't be any argument there. So when you take a look at SPIVA, which is S&P 500 versus active investing, it shows that over a period of 15 years, over 95% of active investors cannot match the simple act of holding the S&P 500 by buying SPY. Now, why would you argue that? Those are facts.
Well, it's an interesting story. So I'm who is definitely in 5%. I would have to subscribe to a theory that whatever I've done in the last 6 months, it's a fluke, and I have to go back to 95% who are there making 6-7% a year, and do it at my own will. And I don't know how to say it's not going to happen.
Sasha, if the market is done for over 100 years now, a little over 6% inflation adjusted, and most advisors say that you should withdraw 4% of your portfolio will grow if you take out less than it's making. Why would you want more? For the
Well, it's also a time of your life, and question for a lot of people. You know, I know that I was very growth oriented when I was younger, and at this stage in my life, you know, I'm really more about preservation of principle.
Yeah.
And so, you know, like if I just make 2% a year now after expenses, then you know I'm what we call fat, dumb, and happy. And you know, so my investment objectives change over time as well. And
I
I think
agree.
and Sasha, I think is in this what he's talking about. I think is there's an amusement factor too that you know, he's amusing himself,
Yeah.
and I think we can't put a price on that.
It's a fact, Jim. It's a great amusement. If I, you know, what I'm doing actually, another benefit of that is that, for example, I sold, what is it, January, whatever, put on NVIDIA, right? But you see, because NVIDIA stock is fluctuating,
Yeah.
I can, an hour, 2 hours later, I can purchase back that put at quite substantial profit. So that's this element is built as well. Of course, if I got premium of 60 some dollars, so today Nvidia is say 420, so I'm protected. Even if Nvidia will fall to 360, I'm protected. And I don't see Nvidia will go down to 360 by January. It will go most likely to 550 by January than to 360. So what I'm planning to do, I'll wait until this interest rates business will be done and over with.
Yeah.
I'm planning to, with the premium that I got from selling put, I'm planning to buy some high velocity calls on NVIDIA, something like January 550 calls. They're not expensive at all.
Yeah.
But if I'm right, I will make incredible. I will not buy a lot of them. I'll buy maybe 10 calls. But that could be a substantially lucrative investment, which is paid by NVIDIA puts anyway. So it's not going to cost me anything. So
most buyers of derivatives lose money, don't they?
Yes, I do. Yes, I do. But if this calls cost me nothing, if NVIDIA paid me $60 for each put that I sold, why do I care? Yeah, I may lose this money. I will lose fraction of what I've generated in profits from.
If you buy an NVIDIA derivative to cancel a sale of the same derivative, what does that cost you? What's the cost involved?
Wait. I'm not canceling anything. I sold puts, and I will remain in that position. I'm not going to cancel it.
Oh, okay.
But with the cash that I've generated, I can afford to buy several calls way high out of the money, because in the money, they're still quite expensive. they're
Right.
more lucrative. It's more likely that I will make money if I will buy, say, January 420 calls on NVIDIA. I mean, it's any idiot can make money on these calls. But if you're buying 550 calls, it's kind of a risky proposition. But
But you're also playing with house money, Sasha.
but I'm playing with house money, absolutely. So if you are playing blackjack and you have 16, and it's very risky to take a card, but if you are playing with the house money, you don't care. So you take the card, okay, you lose, you win. Doesn't matter anymore.
Well, the put-call ratio that I described earlier, as applied to the entire market, can easily be applied to individual stocks. And if the put-call ratio suggests that any individual stock, like NVIDIA, is going to be very positive because it's in market sentiment is very strong, then doing what you're doing makes a lot of sense.
And Milan, I wanted to say that, I think that's a good point that you just made, but also you're talking about the S&P, that put call ratio sounds bullish now. And I think that there's reason for that. I think people have for a long time said, well, I'm doing okay, but the economy is doing poorly. And, there was a disconnect there. And I think more and more people are saying, hey, the economy is not doing so bad. And people, I think, the sentiment is generally bullish now. And the S&P was in a bear market, and it's emerging from it. So that we don't know how long that will be. The trend is your friend until it isn't. But, usually, I think once you exit a bear market and enter a bull market, those are prime time to be involved.
Yeah, sure.
Yeah, we have some messages here about the company by the name Fabletics,
I don't know it.
which is probably in the same line.
It's in the same line as Lululemon and everything. And like I said, I had first seen it in advertisement, and they're advertising heavily. So I know that sometimes, not all the time, but sometimes if you start seeing companies that are private start going into the public lane, that is a sign that they might be going public as well. So that's one of the things I was wondering about.
How can we profit from that until they will be public?
Yeah, the IPOs, I'm always thinking the smart money makes money in the IPOs, and I'm never one of the smart money. So I don't get involved.
All I can say is, to me, Fabletics is a poor man's Lululemon. That's the best I can describe what is it?
Fabletics.
Fabletics. Yes. Okay.
But talking about IPOs, almost 0% of IPOs are profitable 3 years down the road.
Yeah.
Except
I get it. It's Fabletics, like athletics.
Right.
It's fabulous athletic wear.
Mm-hmm.
I see. Workout clothes for men and women. Yeah, it's in the Lululemon space. You're right, Mark. So,
and that's actually how their advertisement was geared. They were saying that they were the better version of Lululemon, and they were definitely trying to put themselves as a direct competitor to Lululemon, because they even mentioned Lulu several times in the commercial that I saw. So
that would make me want to buy Lululemon.
Good point. Maybe they're pushing the wrong form of marketing and advertising. They might be messing up by doing that.
We're going to be the next Coke.
Unfortunately, Lululemon didn't go lower as I expected. It went a little bit lower, didn't even stay there, and now it's going through the roof again. So I don't know what to say. Okay, the earnings are a little bit far away for now. So I'm watching the stock, but I'm not doing anything with Lululemon yet. But another interesting stock that I used to own and make a pretty good profit, if you remember, Palo Alto Network.
Yes.
It continues to go through the roof simply because from the June 20th, it will be part of S&P 500. So
I missed the boat on that one. It's right next door to me.
Milan, you will be owner of Palo Alto Network. Congratulations.
You're owner of 500 companies when you buy SPY, right?
Well, I don't know which company will be replaced by Palo Alto Network.
Oh, right, yeah.
It's going to be 500. It's not going to be 501. It's got
Right.
500. So one
Right.
company will be gone, and Palo Alto Network will be in. So, and in my opinion, it could be that it's the beginning of its bull run, simply because once it's in S&P 500, so
Yes.
any fund managers, anyone, pension funds, they all will be indirectly buying into Palo
Because
Alto.
they can't be shot or criticized for buying if it's in the S&P.
Yeah.
So, yeah, it's safer for them to.
Oh, no, not even buying Palo Alto Network itself, but just buying S&P 500
Sure.
unit. You're indirectly buying Palo Alto Network.
Oh yeah, it's definitely a step in the right direction for that company. No question.
Yeah, it seems to me that it's going to do very well. Also, what I done today, I sold put on CRM. It's a Salesforce. It had very good earnings report, then it went down, and now it seems to me maybe just with the market it's moving higher. And but I sold this coming Friday put. I don't want to hold it for a long time. So once there will be Friday expiration date, it will expire worthless most likely. And if not, I will be a proud owner of Salesforce for and will sell covered calls, I guess. But so far, what I see, it will expire worthless. So here and there. Listen, I'm not trying to be very scientific about what I'm doing. Once it works, it works. You don't break something that works. And just enjoy yourself while you understand in stocks like CRM, NVIDIA, Palo Alto Networks, Lululemon, and many others, what they've done, you are trading against professionals. There's no doubts about that. Very few individual investors, at least those that I personally know, they don't touch the stocks. Maybe they will buy S&P 500, but they will not touch these individual stocks. So I don't even have anybody to have meaningful discussion about the merits of the stocks and what's going to happen to them, because no one does it. And I am not in communications with any professionals either.
I had a very wealthy man over for dinner the other day, and he is deriving all his income by buying and selling real estate. You know, you're talking about market wizards. He could be a real estate wizard. The trouble with real estate is the lack of liquidity. The condo that I live in now, which we bought about 7 years ago, was on the market for 3 years before we came along. Lack of liquidity. But this man seems to be doing very well by buying houses, buying a house, buying a property, and at the right place. It would be San Francisco a while ago, Toronto, Vancouver, the places where this works, and then selling it, and he's just living from the money that he makes by selling these homes which he bought previously for a lot less. Now, is there such a thing as a real estate wizard like there are your market wizards?
Oh, of course there are. But also in the rising market, like here, I live in the middle of Silicon Valley, and people would buy a home, live in it for a year, and then sell it. We called it flipping homes. And it was a way for them to generate substantial amount of income with very low risk, because they use whatever, when they sold, they would get a down payment for another house, and they would have plenty left over to live on.
Would they be paying income taxes on the gain?
And they had to pay income taxes, yes. So this tells you can only do this when the market is going up and up substantially. But it was in Silicon Valley.
In Canada, by the way, you don't pay income taxes on the growth of your primary residence.
That's very civilized.
Well, yeah, but you can't deduct any expenses connected with it.
Well,
which in the United States you can.
Yes, but you pay more than you deduct.
Should be that way. Yeah, that's right.
Well, real estate is all different ball games. There are a lot of possibilities. You can develop the properties. You can go into real estate syndicates.
Yes.
There are numerous opportunities. But again, it's I'm not saying that it's either better or worse than stock investing or options play. It's just different ball game, and it's more maybe for patient people who.
And also, everybody and their uncle became real estate brokers.
Yeah, right. That's right.
And so,
oh yeah,
they when it stops going up, everybody gets flushed out. And it will stop going up. That's the thing.
Everything. The stock market will stop going higher. There will be some point. But it's something tells me that because 493 stocks of S&P 500 didn't do anything at all for the last several months, so maybe it's a time that they will finally, once all this garbage with interest rates will be out, and maybe they will start going higher just in sympathy with their older brothers.
I've been saying for a long time, I hear myself saying this almost on a daily basis. As soon as you find an easy way to make a buck, call me, and I promise to do the same for you. And actually, I'm a retired dentist, and dentistry has done really very well. But the thing is, to become a dentist, not an easy thing.
No.
It takes 4 years of university education to qualify as a dental student, and then turn away 11 out of 12 applicants. So getting in there is a challenge. But once you're in there, maybe you could say it's not a bad way to make a buck. Yeah.
Totally agree with you. Absolutely.
And the same thing with investing. I studied investing. I went to the library. I read a lot. I listened to the nightly business report every night. I studied, and I listened to the talking heads on the TV. And it turned out it took me a couple of years to figure out, my decision making is superior to theirs. And I stuck to what I knew. I didn't go into something that I didn't know anything about. And this is just the discipline that I attached to myself, was stop listening to everybody out there with their greatest new ideas and concentrate on what I think is going to happen in the near-term future and what companies are going to benefit from that. And that was the discipline that I had that made me a successful investor. And, but everybody's got to figure out what they're comfortable with. Do you want to just make some money over time? Then Milan is laying out the way you can do that. Do you want to have a core portfolio, which Sasha and I do, and a fund portfolio, which Sasha and I do? And I think Sasha has much more fun than I do, by the way. But you can have fun investing as long as you can afford to lose the money.
And have the time for it. Have the time for it.
Yeah,
to have the time for it also, because people who are working, say professional generally, are making most of their income from what they do professionally. And so they cannot spend the time playing the market, if you want to use that term, that's required to be one of the winners.
Talking about amusement, I was just thinking about something. When I today sold puts on NVIDIA and generated over $6,000 for each put, I'm started to think, so the guy who I sold him the put, so he bought the puts. He paid $6,000 for each put. What is his game plan? How is he going to make any money by doing this transaction?
For every winner, there's a loser.
There's always a winner and a loser. Hey, Sasha, that's one of the things that's one of the things I was curious about is when it comes to investment, there were a number of things that were invested in during this pandemic, and I'd actually put this in the chat earlier, that are now probably sliding down and everything. Because I know a lot of people were very excited about Zoom, they were excited about StreamYard, they were excited about these virtual platforms, but now that people are going to work, I'm thinking that some of these products and some of these companies might be heading toward a downfall. But as y'all are definitely wanting the people to go to the experts, as we always say, and everything. But what is your thoughts about this? Because there are probably some people that are invested in companies that are now part of the reverse trajectory of what was going on. Because definitely those companies were important because they were part of what was needed. But now that people are going into the office, maybe they aren't as needed as much as they used to be.
Mark, it's a very good example that you just said as Zoom. I remember a time when Zoom was $500 a share. And it collapsed now. It's $60 or $65 a share, or so on. So it's tremendous amount. If somebody would held to that stock, let's say somebody bought 100 shares at $500. Doesn't matter how many covered calls he would sell, he would lose probably 90% of his investment anyway. So this is a horror story. Really, it's a horror story.
A very wealthy friend of mine says that if you stay in business long enough, ultimately you go bankrupt. And so he just sold his business, his ski resort, owned the largest ski resort in the Eastern Seaboard, He just sold it before COVID. When COVID arrived, no skiing took place. The people who bought it from him are taking a kick in the
They're
shin.
getting in shorts. Yeah.
Yeah, but if I could just give another example, and I don't know what their stock is because I don't follow as much as you gentlemen do and everything, but I would imagine that at some point there is a lot of people overseas that are using these call centers, and these call centers used to be very popular and they are still somewhat popular, but I'm thinking companies like Fiverr and other ones like that might also eventually be running into that same problem, because I don't know that you're necessarily going to need as much of that overseas aid as you used to need before. But like I said, y'all are in this investment space. But what is your thoughts? Because that might be different than a Zoom stock.
I look at the stock occasionally. I don't have any strong opinion about that stock. It's fluctuates. I don't quite understand their business model, and I wouldn't buy it, and I wouldn't short it either.
Yeah, my feeling, Mark, I think you're raising a really good point, but there's a couple of phenomena that's going on. Was one, we saw a max exodus from Silicon Valley when people could work remotely because it's so expensive to live here.
Yeah.
And now people are coming back because of this AI phenomena. And it's also affecting the call centers. The call centers, everybody's going to need call centers, and they don't want to pay people in North Carolina to do it, so they will ship it overseas. And yet now their bots take up so much of the time that people used to have to answer the phone. Now we have these press 1 if you want to speak English, press 9 if you want to speak Spanish, and then by the time you're done pushing more buttons, they've given you a robotic answer, and you've got to really work at it to get to a human being at all, wherever they're located. So that's what's going to happen to this industry in time, is that human beings are getting phased out.
What you're talking about, Jim, in some ways makes a lot of sense. We used to see a lot of this happening in a dental office. A patient is standing in front of the desk talking to the receptionist about the next appointment, about the kid or something. The phone rings. The receptionist answers the phone and puts the person who's standing there on hold. Yeah. So that's been changed. So, I frequently mentioned about the natives here who used to use smoke signals, and they could send a message over a distance of 500 miles in 15 minutes using smoke signals. When's the last time you got a human being on the phone in 15 minutes?
Actually, dentists are in a great situation, because once somebody in the dentist's chair, he cannot run away anywhere, right? So you can answer the phone, you can go to have a cigar, you can do almost anything what you want.
It's not just a dentist. It's not just a dentist. 2 weeks ago, I had I'm not wearing them now. They are back there. I have my new pair of glasses, but I just went to my optometrist, and yes, you are pretty much held in position by the optometrist as well when they are giving you those eye exams. So it's the dentist, the optometrist, and a number of the specialty fields.
Number 1 or number 2?
Exactly.
Exactly. Well, with that, we're about to close our program. I hope, Mark, for next program, or in 2 weeks' time, you will bring your friend who is specializing in crypto.
I'm working on a couple of them, so not just one, but a couple of them.
Yeah, you can bring one. It's more than enough. You don't need 2. Just one will be enough. Or if you have many friends, we can have several shows. Bring one at a time, and have our
discussions around crypto and all in that space, because we know that folks are looking at that as well, just like they're looking at penny stocks. I might have a penny stock friend for you as well. So somebody in that lane also.
Okay.
I say modern investing, not modern speculation.
Modern investing. We'll talk about crypto. Is crypto part of modern investing, Mark?
Well, and some people, as I've told y'all before, have a variety of a portfolio, so they choose to use crypto as part of their investment strategy. So most of the people that I know that are in crypto, as a matter of fact, the ones that I have mentioned to you are also ironically investing in the traditional stock market as well as other things, including real estate, because one of the people I know that's in the crypto space is also in the real estate space and does some flipping of houses as well. So most people I know have a multiple layer to their investment strategies from what I have seen. That is what I have observed. And some of them do use crypto as part of their strategy. I don't know anybody that does it strictly crypto alone and all of that. They usually have a multitude of things that they do in that space.
But even crypto is part of their overall portfolio. Would they be able to track whether they are making any money on crypto or losing money on crypto? Or because if it's a part of portfolio, let's say portfolio went up 20%, so would they know that crypto made actually the same 20% profit, or it's made 40% profit, or it lost 20% in the period of time?
And most of those that I know, and like I said, I'll let them speak for themselves, but they do the same thing that Jim just said that he does. Because people that I know, when I see them in the spaces that we share, and we share some office spaces sometimes, they are literally doing their due diligence in their research. So they are doing research on their investments in crypto. They're not just doing it willy-nilly, and they are usually trying to invest in what they feel will be
Okay,
something that is beneficial to them, and they can explain it better than I can. But they have
excellent.
a strategy with what they do.
Excellent, Mark. Looking forward to it. Thank you so much, for everybody, for participating in today's program. We'll see you same time next week, same place. Thank you
Delighted.
very much, everybody.
Thank you.
Sounds
Bye
good.
bye.
Bye bye.